When we talk about types, we have two broad classification of taxes. The first one that we have, right? The first one that we have is called current tax. It's called current tax.
Current tax.
Yeah, that's what it's called. It's called current tax. And then the second type that we have is called deferred tax. It's called deferred tax. So that is the two broad classification of taxes, right? So let's look at the first one, current tax. Current tax. Are you with me?
Yes, sir.
So this is a liability. This is a liability for the current year, right? Or prior year that will be settled within a short time. Within a short time. Within a short time, right? But settled within a short time. That's just a simple way I can explain that. So example of that, example of that, you have your company income tax, you have your company income tax, right? You have a tertiary education tax. Tax, that is that about current tax. So the next thing we then want to look at is what is deferred tax. But before we look at what deferred tax is, are we together, please? Before we look at what deferred tax is, there's need for me to explain something. The first I need to explain is called tax base. The first I need to explain is called what?
Is it a term, sir?
Yes, the term. So let me just call it definition of terms. Before I explain definition of terms. So the first one I said you need to understand is called what? Tax base, right? Now, so tax base is the amount attributable to an asset or liability for tax purposes.
Is
Do you get that now?
attributable.
The amount attributable to an asset or liability for tax purposes. This is the amount attributable to an asset or liability for tax purposes. So usually in the context of the local tax law, we call that tax written down value. I'm sure when we were doing capital allowance, we must have had this very much consecutively, right? So in the context of
Is it under the tax base that we have tax written down value?
yes, the other
So
name
we can call it
like a
EG.
synonym. So yes, the contextual name is called tax written down value of an asset or liability. The contextual name is tax written down value of an asset or liability, right? Now, the next thing I need to explain is called carrying amount. Carrying amount. I'm sure everyone in this class knows that carrying amount is the net book value. Net book value, right, of an asset. That is the amount recognized for an asset or liability, right, in the statement of financial position. In the statement of financial position. Is it clear now?
Yes, sir.
Now, the next thing I want to look at is called temporary difference. It's called what? Temporary difference. So temporary difference is the difference, right, between an asset and, between the carrying amount of an asset, and
Between the
the carrying amount of an asset and the tax base of an asset or liability. Right. The difference between the carrying amount of an asset or liability and the carrying amount of an asset or liability. Now, when you have a temporary difference will result into two occasions. Temporary difference will result into two stuffs, right? The first one is called taxable. The first one is called what? Taxable temporary difference. It's called taxable temporary difference. It's called taxable temporary difference, right? So this is when the difference between the carrying amount and the tax base, right, will result in future tax liability, right? Are you with me? Are you with me now?
Yes, sir.
This is when the difference between the tax base,
Carry
right?
amount.
The difference between the tax base and carrying amount will result in a taxable amount in determining future taxable profits or loss. Right. Are you with me now?
Yes, sir.
So, but just take the English to mean that if the difference between the tax base and the carrying amount will result in the future tax liability is referred to as what? A taxable temporary difference. The other one we have is called deductible. Deductible temporary difference. It's called deductible temporary difference, right? This is when the difference between the tax base, right, and the carrying amount will result into future tax credit. Right?
So
It
the
will
carrying
arise into what?
amount will
Will result into future tax credit. Right. Will result into future tax credit, right? So now, when you have the taxable temporary difference, the product of taxable temporary difference is now called deferred tax liability. Deferred tax what? liability. It's called what? Deferred tax
Please, sir, can you come
liability.
again on it?
I said when you have a taxable temporary difference, the product of taxable temporary difference is called deferred tax liability. Do you understand now? Well, any case that results into a taxable temporary difference would definitely result into future tax liability. Do you understand now? So if it's going to result into future tax liability, that future tax liability that we derive today is referred to as deferred tax liability. Do you get that now?
Okay, sir.
So deferred tax liability is the amount of income taxes payable, are we together,
Yes, sir.
in future period as a result of deferred, sorry, as a result of taxable, I mean to say taxable temporary difference. Then we have finally deferred tax assets, right? So if taxable temporary difference is a product of deferred, if deferred tax liability is a product of deferred taxable temporary difference, it simply suggests to us that deferred tax asset is a product of what? Deductible temporary what? Difference. Are we together now?
Yes, sir.
So this is the amount that is recoverable in the future as a result of deductible temporary difference, as a result of the deductible temporary difference. Are we together?
Yes, sir.
Or carry forward of unused tax credits. So that's it now. So that's it about the whole idea of deferred tax. You understand? Do you understand the idea now, Abi?
Yes, sir.
All right, good. So now that's it there. So how do you now get your deferred tax? How do you get your deferred tax, right? How do you get your deferred tax? Your deferred tax, like I said, is a product of what we call uh, so let me put it this way: determination of deferred tax, right? Let's go to the steps, right? Step one, determine the tax base, right? Step two will be what? Determine the carrying amount of an asset or liability. Step three will be what? Determine the temporary difference. Determine the temporary difference, right? This is the difference between the tax base and the carrying amount, right, of an asset or liability, right? Then step four, are we here together?
Yes, sir.
Step four will now be that you determine the deferred tax assets, that means deferred tax assets or liability, and that is equal to temporary difference times the tax rate. Temporary difference times the tax rate. So that's simply a brief overview of what we are to look at. So having said that, let us delve into illustration. Let us move straight into illustration. Right, right, right. So
So
that you will
I'm not
understand.
seeing your board.
Yes, yes. Yeah, just a minute. So let's move straight to illustration so that you will understand what I'm talking about better. Okay. Any moment from now, you will see my screen. Just confirm that you can see it anytime it pops up. Yeah. Okay, so let's move on. Can you see my screen?
Yes, sir.
So let's go. Hmm? Okay. Oh yeah, please read so that we can move
Isiaka Jimo Limited is a company engaged in manufacturing of Imrat oil. Its accounts for the year ended September 30th, 2017, revealed the following results. Net profit for the year after charging 300. Depreciation of property, plant and equipment 25,500.
all
Loss on
figures
sales of
assumed correct. Let's move to the next.
okay.
Let's move to the next thing. Additional information.
So they said the company tax as unrelieved losses of 15 million. Capital allowance claim amounted to 55 million. The tax written down value of a fixed asset as at 30th September 2017 after the above capital allowance have been taken into account was 520 million, while the net book value of the same date on the same date was 550 million. The opening tax written down value and the net book value were 665 million and 630 million respectively. Unpaid tax at the beginning of the year was 52 million, while payment in the year was 50 million. Assume a depreciation rate of 5% on property, plant, and equipment. Is that the question? That's what I have.
Yeah, please go ahead.
Okay. The company reviewed its property, plant, and equipment during the year ended September 30th, 2012. The revaluation surplus arise from the evaluation which amounted to reflected in the company's financial statement for the year. Given the information above, you are required to compute the company tax liability for the relevant year of assessment. B. Compute the deferred. Compute the deferred tax.
Okay, so determination of income tax liability for what's the year of assessment, everybody? So we have the 2017 statement, and companies are assessed to tax on preceding year basis. Year of assessment, right? Are we together?
Yes,
Have
sir.
you forgotten? So the next thing we need to do is what? We have to pick our net profit. Don't forget that. So what's the net profit? Net profit is how much? 300 million, right? Add the allowable expenses. So what are the allowable expenses? So we have depreciation. How much is the depreciation? So we have depreciation. We have depreciation on PPE. Okay. How much is that? So we have 22,500. Abby. We have loss on sale of PPE. How much is the loss on sales on PPE? 500, right? So we have penalty and fine. How much is penalty and fine? 200. Can you all hear me?
Yes, sir.
So we have loan interest when the examiner is silent is allowable. Salaries and wages when the examiner is silent is allowable. Then we need to check the additional information. Do we have any information regarding the items that we have here? No. So since we do not have any information, so what's the total of the three? That's 23,200 of it. Then less non-taxable income, right? What's the non-taxable income that we have? We have franked investment income. And how much is franked investment income? How much is franked investment income? How much is it? 20,000, right? Then we have interest on loan repatriated. How much is it? 500. How much is that? 5. 600. So when you do that, so what do you have in total? Please help me. So here, when you do that, you have adjusted. How much is adjusted profit? How much is adjusted profit? Am I alone? Hello? That's 297. Can you all hear me? So less
Yes, sir.
loss relief. How much is the loss relief? So the company has a relief loss of 15 million. So you take that out. Take that out. You have how much? And less capital allowance. How much is the capital allowance? 55,000. When you do that, get what? You have 27,600. Total profit, 57,600. Right. So you now have CIT at 30%. What's CIT at 30%?
Please, I'm not seeing your write-off.
Is on the screen. 680. Can you see? CIT at 2%. Don't forget, I said for this tertiary education tax, you have to always consider the year. So because we are doing 2018 year of assessment, that's why you are doing 2%, right? That's 5952.
Net profit.
Welcome. Oh.
Me, sir.
Yes, welcome.
I did not go to anywhere.
Okay. I agree with you. $68, 74, 282. Right. The thing is, so that's that about the first part of the question, right? That we should determine this. So in the context of our class, the CIT and TET here, will
Okay.
form part of our current tax. Will form part of our current tax. So now to compute deferred tax, Abby, computation of deferred tax. So we have, let's put in some tables together. So here, and let's put in some tables here. So that's really nice. All right. All right.
Please, can we see from the adjusted profit?
What's here?
I said, can we see
Okay,
this
you want
thing
to see
from
from
the?
registered profit?
Yes, sir.
Okay, I will show you now. So this is
Okay, sir. Adjusted
okay.
profit.
So here now, if you notice, we're given the value of the, please stay with me here. We're given the value of these assets, right? As at 2017, 30th September 2017. Is that clear? So we were given the value of the asset as at 2017. Are we together?
Sir?
So that's, we were given the value, note 3. The tax is now value of fixed asset as at 30th September 2017, right? So this value there is the closing balance for the year of assessment we are doing. So the year of assessment we are dealing with here is which year? 2018.
Okay.
2018. 2018. Why? Then the second year we are dealing, the opening balance. You know, there's a law in tax or in accounting that the closing balance of the previous year shall be the opening balance of the new year. Do you know that law? So
Yes,
because
sir.
of that, it means the opening balance we have is for 2017 year of assessment. Is it clear? So all figures are written in thousand, are written in thousand, are written in thousand. So the first thing we have is, don't forget the definition. The definition is the difference between the tax base and the carrying amount. So what's the tax base? Don't forget when I was explaining tax base, I said you can also see it as what? You can also see it as what? The tax down value. So the tax down value of fixed asset as at 30 September 2017, after the above capital allowance have been taken into account, was 620,000, right?
Yes, sir.
And the opening tax down value is how much? 665,000. Right. Are we together? Then you have less carrying amount. We have less carrying amount, right? Now the carrying amount is how much? We were told after the capital, the net book value was how much? 550,000. And don't forget, we said the carrying amount is same as what? Net book value. Is that clear? Carrying amount is same as net book value in the context of this class, right? So for that reason, the carrying amount is how much? 550,000. And the carrying amount as of 2017 was how much? The net book value was how much? 630,000. 630,000. That's the first thing we need to note. Then the next thing you are checking for is there any revaluation? Is there any revaluation? Because revaluation is assumed to have increased the value of an asset. Remember that the current amount of an asset is the cost less accumulated depreciation, add revaluation surplus. Do you understand? So the revaluation surplus is expected to have increased the value of the asset. So in any question you are given, check if the asset was revalued or not, right? So in this case now, note 6 is saying that the company revalued its property, plant, and equipment during the year ended 30th September 2012, right? So the valuation surplus, arising from the valuation which amounted to 100 million was reflected in the company's financial statement. So we have revaluation surplus. We have revaluation surplus. So how much was the evaluation? 100,000. Are we together?
Yes, sir.
Now, this 100,000 would have
Sir, this
attracted
table,
depreciation.
I don't understand this table.
Okay, so where should I start from?
Is the table, I don't understand it.
Okay, so the table now, let's start from the beginning again. The table is just for easy identification. All right, the table is just for easy identification so that I can do 2 years side by side. So we're told that the terminal value of the asset was given for 2017, which is 2018 year of assessment, and the opening balance is for the previous year, right? That was the closing balance for the previous year, and that's 2017 year of assessment, right? Don't forget that we said the temporary difference is the difference between the carrying amount and the tax base. And don't forget that we said that the tax base is same as the taxable value of the asset. So the taxable value of the asset was how much? 620 million. And that's what we have here. And the taxable value for 2017, which is the opening taxable value, is how much? 665,000. Right? And don't forget we said that the tax base must be deducted from the carrying amount to get the difference. So the carrying amount, which in the context of this class is the net book value, is how much? 550 million and 630 million. 550 million and 630 million. The revaluation surplus.
Hello, sir. Good evening,
Yes, ma'am.
sir. Good
Good
evening,
evening,
sir.
madam.
Please, my question is there a difference between carrying amount and net book value?
It's the same thing.
Really, no difference, really.
Okay.
It's just
Thank you, sir.
no difference. You're welcome. So, right. So now we have 550,000 or 550 million and 630,000. But we said this carrying amount was including revaluation surplus. And revaluation surplus is not useful in the context of this class. So for that reason, we have to deduct the revaluation surplus from the value of the asset. We have to deduct the revaluation surplus from the carrying amount of the asset. So what's the revaluation surplus? It was revalued in 2012 and the valuation surplus is 100 million. So we have 100 million here. What was done in 2012 is going to affect both 2018 and 2017. So that's how far we've gone on this table, right? So then you say less depreciation. Is Samiat here?
I'm here.
Okay, so now we need to do some work here to determine the depreciation. Determination of depreciation. So in determining depreciation, we have to consider two things. The first thing you have to consider is the year the asset was revalued, and the second thing you have to consider is the year you are working on, right? So when was the asset revalued? Hello, when was the asset revalued?
It was let's check the valuation of the asset.
30th September 20.
12, right? So
Yes.
how many years do we have between
Additional information
2012?
6.
6. How many years do we have between 2012 and 2018? How many years do we have between 2012 and 2018? That's
Six.
estimate.
We have 6 years. We have 6 years.
We have how many? We have 6 years, right? The next thing then need to look at what's the depreciation rate. What is the depreciation rate, right?
Hello, sir.
Yeah, me too. So I'm asking.
You say what, sir?
I said, what is the depreciation rate?
Is
What is
five
the
percent.
depreciation? Okay.
Is five
So since
percent.
the it's 5%, right?
Yes, sir.
Sorry, just a minute.
Additional information 5.
Okay. So here we have 4. So therefore, we will now do depreciation here. 100,000 for 2018. Or you do 100,000 times 5% times 6 years. So what do you have? What do you have? Please help me.
You said
So 100,000 times 5% times 6 years. What do you have?
100,000 times 6. We have 30,000.
So we have 30,000. So the same to do for 2017. So you have 100,000, right? Times 5% times 5 years, sorry. How much do you have?
You said, sir, come again, sir.
100,000 times 5% times 5 years. What do you have?
25,000.
So you have 25,000. right? So now, what is the difference? Now, what's the difference between the evaluation surplus and division difference? That's 100,000 minus 30. What do you have?
We
You have
have 30.
70,000, right? And 100,000 minus 25, you have what? 75,000. Then, so 550 minus 70, what do you have? Please help me.
You said what, sir?
550 minus 70,000, what do you have?
550 minus 70. You have 480.
You have 480,000. So you take that to the extreme, right? So 630 minus 75, what do you have?
630 minus 75. We have 555. 555.
1,000, right? So the temporary difference,
Yes.
that's 630 minus 620 minus 480. What do you have?
Minus 480.
Yes.
You say 630 minus 480.
So I mean 620 minus 480.
620. We have 140.
You have 140,000. And on the extreme, you have 665 minus 55. What do you have?
Minus what, sir?
555.
660.
5 minus 555. 6565 minus 555. What do you have?
110,000.
Sorry, sir. You
110.
said 356.
665. What you have on your far
Okay.
right? 665 minus 555. Right. So this difference is called what? Temporary difference. The next thing is determine the next temporary difference. Determination of net temporary difference. So you have opening temporary difference is how much? Yeah.
We
Opening
have
temporary
140.
110,000. 110,000. No, 2017 is the opening. Or let me do this closing first before the closing temporary difference is how much? 140, right? Then less the opening temporary difference. That's 110,000. So what's the net temporary difference? Net temporary difference.
Net
Temporary difference. That's the difference between the opening and the closing. What do you have?
closing and the opening. That's 30.
That's 30. Good. 30,000. Right. Now, where are you with me now? When the tax
Yes, sir.
base is higher than the carrying amount, you say you have a deductible temporary difference, right? When the tax base is higher than the carrying amount, you say you have a deductible temporary difference. And what are the deductible temporary difference we give right to is called what? Deferred tax asset. It's called deferred tax asset. So deferred tax asset adds, you'll be given the tax rate in the question. But in case you're not given the tax rate conventionally in Nigeria, the maximum tax rate in Nigeria for CIT is 30%, right? So you will use 30%. That's where the examiner is silent. But ideally, the examiner is expected to give you a rate. So are you giving a rate here? No. So the VAT tax is that of 30%. So what's 30% of 3,000? 30,000, beg your pardon. Please help me.
9,000.
9,000. Okay, good. So this is it here. Any question?
Mm. Something looks simple, but it's not simple.
Hello, sir.
Yeah,
Can you do a brief rundown?
don't worry. What will happen is in my second illustration, you will grab anything you miss here.
Okay. Maybe start from the explanation to what the
Yes, the
summary of
second
what you
explanation is,
said before before solving the question. I got
yeah,
some
don't worry.
aspects.
Like I said,
Oh,
no, I explained everything before solving. I didn't do anything strange that I've
no,
not
that's what
explained.
I'm saying. Yes, the aspects you explained is what I got some, I didn't get some.
Okay,
And
no
I
problem. Like I
and
said, don't worry. I will still do the second illustration, and the second illustration should assist you to get everything right. So now this is about computing deferred tax. But another thing that is of interest to us is presentation, right? Presentation in the financial statement. Presentation in the financial statement, right? So we have in the statement of profit or loss, in the statement
have you
of
told us
profit or
something?
loss.
Huh?
Eh?
You don't want to go to the thing. So,
Are you talking to me?
okay, I didn't off my mic. No, sir.
So in the statement of financial, I mean the statement of profit or loss, the statement of profit or loss will contain basically your current tax and your deferred tax asset for the year. Only the provisions for the year will be in the statement of profit or loss, right? So now let me say that now. So common income tax, this is the presentation now. Common income tax, you have an amount, then tertiary education tax, you have what? An amount here, right? Then you have under or over provision for the previous year, right? So what under provision simply mean is that last year you didn't provide up to the tax amount, right? So it means if you don't provide up to the tax amount, you add the difference to the new tax. But last year, over provision simply means you over provided. You provided more than the tax liability. So the implication of that simply means that you will deduct that from the current year's tax, right? So you say deferred, add provision for deferred tax liability. Like I said, only for the year, right? You are not with me again, no.
I'm with you.
We've gone to look for dinner.
No,
So how much do we have there? Right. Then less provision for deferred tax assets, also for the year. So they have. So this will be amount in the statement of profit or loss. All right. If we do this, you have the amount to be shown in the statement of profit or loss, right? The next statement that we need to do our presentation is called statement of financial position. Statement of financial position. And for statement of financial position, you have unpaid tax at the beginning. How much is that? So you have an amount, right? Then you add provision for CIT, provision for TT, right? Then you have under or over provision. Under over provision for the previous year. The same explanation I made before about under or over provision still applies, right? Then deduct tax paid during the year. What tax paid during the year, right? Then deduct withholding tax credit, withholding tax credits utilized. And if you do that, you have amount to be recognized in the statement financial position. All right. All right. Any question? Any question? So in case there are no questions, let us solve this second illustration. Let us solve this second illustration. Hello, are we together?
Yes,
Are you
sir.
tired? Are you tired already?
No, no, we're trying to get understanding. I don't think it's try to get it in to understand it. So, sir,
No,
in this format now, what are we determining in this format? The
good.
third task.
What what you are determining in this format, right? For the first format, if you look into statements very well, I mean financial statements, you will always see current tax or income tax in your statement of profit or loss, right? Last, after profit before tax, you see tax. So you could have it as current tax, taxation, or anything, but that's the estimate of profit or loss. So what we are looking at for the first one is how did they arrive at that
Sure.
amount?
At BBT
No, at
or
the
part.
tax after PBT. At the tax after PBT.
Okay.
Yeah, after PBT you have tax, then you have
You
parts,
have part.
right? Yeah,
Mm.
but after that PBT, how did they arrive at that tax amount is what we are considering here. So the tax amount is basically the common income tax, tertiary education tax, and any other form of taxes that you have in that year. You could have police trust fund levy, you have any other kind of tax whatsoever you can think about, right? Then you have under over provision. Then if it is under provided in the last year, it means you have to increase your provision this year to meet up with the under provision you made last year. That's you had it. But if it is over provided, that means you provided more than you paid. It means you deduct that amount from this year's amount, right? Then if you have provision for deferred tax liability during the year, you add it to it. But if it is deferred tax assets provision that you have, you deduct it from it, and then you get an amount that they arrive in the statement of profit or loss. This second one is we are looking at how do they arrive at tax in the statement of financial position, right? How do they arrive at that tax that you always see in the statement of financial position? So we have unpaid tax at the beginning. That's if they are owing the tax authority, which is usually going to be the opening balance, right? Then you add the CIT amount and the TET amount to it. Then you, of course, if it is under provided last year, you have to provide more to meet up with the provision. And if it is over provided, you have to deduct that amount to reduce the provision, right? Then you now deduct the tax paid during the year. That's the tax that you paid during the year. And in case you didn't pay tax, but you have withholding tax. And don't forget that we used to say that withholding tax is an advanced tax payment. So withholding tax at the end of the day will be utilized. So that withholding tax will also be deducted at the end of the day. So that will give you the amount to be recognized in the statement of financial position. Do you get that now?
Okay. So the formats that we are seeing now is for us to get tax
Yeah,
before part. Okay, sir.
yes. And then that's for the first one. The second one is to show you the tax amount in the statement of financial position. What you used to see under current liability, the tax amount under current liability. That's for the statement of financial position. All right. So do you get it now?
Oh, good.
Okay,
What
we'll
I
go
make
and look at it.
what I
You are
make a this second
distracted. You are distracted.
No, there is nothing like distracted. For example, this I've been seeing this tax of a thing, but I've not really seen the workings like this before. So that's why
Okay.
I will need to settle down and study it. I've not seen it like this.
Oh,
That is the solution
at
or
all.
working it out like this.
I've
wow.
not to.
Is it that my solutions are always long? Because you are always saying that you've not always seen my solution before. This is not that you're saying it. But
And
it's the
sir,
same
So
tax.
because I
after the class, you help us to send it so that we can write it.
Sure. But is it that I used to solve questions from I used to bring stuff from the moon? Because I'm wondering why you've attempted tax before and you've not solved something like this. And it's your syllabus.
We were thinking they don't usually bring question like this.
No, they bring
I'm not,
it. They bring it. They tested it 2 days ago.
which diet?
2 days ago. They tested it.
which
I will
I
I even I will solve that. I will even
Maybe
solve
I,
that question self.
uh,
I will
maybe I
solve the
just
question. Maybe you
just
jump
I
and
was about
pass.
to ask.
Like, is it in your syllabus, Abby? You're about to ask what I'm here.
That okay, in essence, this second format here is
Yeah.
computing tax liability in the statement of financial position. The
Yes,
tax
yes,
amount
exactly. It's for
that
computing
we
tax
find.
liability in the statement of financial position. Correct.
Okay. Then the first
Okay.
one is
Is the computing the tax amount in the statement of profit or loss.
okay. But
All right.
then
Then
are they uh, what makes the difference?
the difference is that your profit or loss statement contains the expenses side of things, right? While your
Then
financial
that
position contains the liability side of things. Do you
the
understand it
profit
now?
or loss contains
The expenditure, the expenses side of things.
okay.
So this whole thing makes the tax expense for the year,
Well, this other one
while
contains
makes the tax liability for the year, the closing tax liability for the year.
okay.
Do you get it now?
Lisa
Okay,
is
sir.
not too. You made mention of that the profit or loss contains ex- the expenditure
Expenses
side of
side,
okay.
yeah, of tax, while the statement of financial
So,
position contains the liability side of it.
trying to solve. Trying to solve.
Okay, you're welcome.
Okay.
So Ojaga, they said we should compute tax liability for the relevant tax year. And the relevant tax year that we have here is 2016 year of assessment, right? So we have
Mm.
determination of right tax like or computation. Let me use the English they used here. Computation of tax liability for 2016 year of assessment. So we have net profit. How much is net profit? What's the net profit for the year? Please help me.
The question.
Lisa, which past question is this? You are not seeing the question sign.
Jaga
Is on
I
the
see a
screen.
question.
is 625.
Ojaga. No. The company
Okay,
recorded the
that
net
one
profit
is
of
okay.
660. Can you see it?
Recording
So we have 660,000.
660. I'm not seeing this.
Yeah.
Okay, yes.
Add this allowable expenses, right? So what are these allowable expenses? So we have depreciation, Abby.
Depreciation, yes.
How much is depreciation? 17,000.
17.
We have stamp duty, right?
Yes, sir.
I'm sure everyone in this class knows that stamp duty is a disallowable expenses, right? And how much is stamp duty? 2 million, right? Then we have interest and bank. Interest and bank charges is an allowable expenses. Interest and bank charges is an allowable expense. Staff cost is also allowable. Do you have any other disallowed? No. So what's the total here? We have 19 million, right? Then less
So what of issue of
non.
shares?
Where's the issue of shares?
I'm asking, is it allowable or disallowable.
Okay, expenses on issue of shares is disallowed.
Yeah.
Expenses on issue of shares is disallowed. All right. So we have profit on sale of equipment. How much is profit on sale of equipment? Are you with me?
Yes, sir.
How much is profit on sale of equipment? 4,000, right?
Yes.
4,000.
Then we have franked investment income. How
25.
much is franked investment income?
25.
25,000. So when you add the two together, what do you have?
29.
29,000. So you have adjusted profit. How much is the adjusted profit? Please help me.
Is 10.
Adjusted profit, 10K.
Mm.
660 plus 19 minus 29.
Okay, we are not seeing the upper side.
No,
660.
is the solution I'm solving. Can you see the solution on your screen?
The only one I can see is stamp duty. All the other parts, I'm not seeing it. 19.
Can you see the okay? You cannot see the upside. Is that what you're saying?
Yeah. Yes, sir.
Oh, it should be better now.
Yes, I can see them now.
Okay, thank you.
660 plus 19 minus 29. 650, sir.
You have 650,000, so you have less loss relief. So how much is loss relief? You have a loss relief in the question. We
Loss
were
of
told that the
living.
company has unrelieved loss of 10 million. Unrelieved loss
Okay.
of 10 million,
Million.
right? So we
That's
have
what.
loss relief 10 million. So how much is the difference now?
640.
Don't sleep. Oh,
Mm.
Okay.
the less capital allowance. The person I was referring to did not talk. Capital allowance is how much? 60,000,
Capital allowance.
Madam
right?
Umeke. Madam Umeke, are
Sir?
you there?
Capital allowance is
Yes, I'm here. I'm here. Thank you
Capital allowance is how much?
for caring. Thank you.
50.
You've got to make it.
Okay, good. Total profit. How much is the total profit?
So it's now 580.
580,000. Right. So you have CIT at 30%, right? How much is
That's
CIT at 30%?
580. You said 30%?
Yeah,
174.
174,000. Then we have TET at what's the year of assessment? 2016, right? So as at 2016, it was still 2%, and it's of accessible profit. And don't forget, we said accessible profit is same as the adjusted profit. So how much is that?
650 times. You have 13.
13,000. So if you add the two together, what do you have?
187.
187. That's all, right? So the next thing we have to do is to determine the deferred tax, right? So you say determination of deferred tax, right? So for us to determine the deferred tax, you know the first thing we have to do? Have you forgotten? What's the first thing?
You start with
Carrying
the
amount.
opening and closing.
Hmm. Want to? What's the first thing you do?
First,
I gave you steps. I gave you
start
steps,
with
right?
that.
The first step is to determine the
You
taxable
determine
value.
the tax
And the
base.
taxable value is called the tax base, right? So we have here 2016 and we have 2015 because of the opening balances that were given, right? So the first thing is to determine the tax base, and usually it will be the tax written down value, right? So what's the tax base of the assets we are computing the deferred tax on? We were told that the tax written down value of equipment was 651 on 1st January 2015 and was 808 in 31st December 2015. Sorry, beg your pardon, this should be 31st December 2015, it's 31/12 2015. So you have TWDV, right? So how much do you have there? You have 808, 808, and you have how much? 651. Is it clear? Then let's please Ekemini, you may want to pay
Yes.
extra attention here because everything you didn't understand in that class, I mean that previous explanation, this will definitely bring light to them. So what's the carrying amount, which is the net book value for the assets respectively? No, yeah. What's the carrying amount? Please help me. So here you have 720,000. Are you still with me?
Yes.
So carrying amount for the assets or for
Yes.
the
Yeah, for the assets. The net book value of the assets. I'm on this note here.
which note?
The one I just highlighted, net book value of equipment.
Okay.
So we're told it's 720 and how much? And
25.
625,000. Yeah. Then you have the next thing you are looking out for is, was there any revaluation? Was there any revaluation during the year? Please check for me. So are we together?
Yes, sir.
Yes, sir.
We were told that the company also revalued its property. The company also revalued its property on July 31st, 2012. And the valuation surplus was how much? 120,000. And you know, like I said in the previous discussion, we said once it is revalued, it cuts across, Abby. After that, the next thing you want to determine is depreciation, right? The next thing you want to determine is depreciation. And if you want to determine depreciation this time, it's going to be the revaluation surplus, right? Times how many years do we have between 2012 and 2015? How many years do we have between 2012 and 2015? And how many years do we have between 2012 and 2016? Please help me.
4 years.
Are you sure? So we have 4 years to 2015. Is it correct?
And did you say 15 or 16?
15 and 16. You know, we're looking at 15 and
Okay,
16
for
years.
2015, 4 years. 2016 is 4 years. 2015
No,
3 years.
let's just take it together. 13, 14, 15, 16, right? So it is 4 years to 2016, right? And it is 3 years to 2015, Abby. But
Yes.
another thing you want to take note of is the date they revalued the asset. So in this case now, the asset was revalued in July 31st. So it means it clocked 4 years in July 31st, 2015, right?
Mister, what did you say?
Do you get what I'm saying? You know the accounting year
Yes.
is December.
Yeah.
So you are looking
Yes.
at it from 2012 to July 2016, Abby.
Okay.
So it will now going to be, you still have about how many months remaining to complete it? Do you get what I'm talking about? You know the accounting year is to December.
Okay.
So, but it was revalued in July.
5 months.
So you have 4 years,
5.
5/12 times 10%.
Is it
And then you have
is it more than in 5 months or less than in 5 months?
what do you say?
Like yes, 4 years. You said 4 years, 5/12. And I thought it's supposed to be 3 years and 7 months.
No, they revalued in July. So you're counting from August to December.
Ah.
Do you
And I
get
think
it?
it's short of that 5 months.
That's
So
for
you
the
shouldn't add.
2015.
Okay, okay, okay,
What I did here is for 2016.
okay.
So let me do for 2015 times 3 years, 5/12 times 10%. So what do you have? Better put. So what do you have? Please help me. If you have something that looks like 53,040 here, and here if you have something that looks like 41,040. Abi? Right, so here now you will have what?
That's 200,000.
No, you can't have 200,000. Let's do it together. Let's do this way. 5 divided by 12 is how much? So plus 4. You give 4.46 times 120,000 times
Sorry,
10%. So I even have 53,000 here. And here I have 41,000. Right? Please help me. All right, types 3 times 120.
What calculator is faulty?
So I have 41,000.
But this one is now complicated, sir. It's not like the one you did.
It's like it. The difference here is just that it was done during the year, not at the end of the year. That's the difference. That's the difference. Nothing differentiates them other than the fact that this was done at the end, I mean, in the middle of the year. Right. So what's 120,000 minus 53,000? We should have 67,000, I mean.
Rita, did you divide 5/12 first before?
Yes. No, we want to have is 4 years, 5/12. So it's better you divide it before adding it 4. They multiply by 120, they multiply by 10%.
I didn't get that. I'm dividing
If
5/12
yeah, then add that to 4.
plus 4.
Yes.
Are we adding?
Yes, you're adding. You know,
Okay.
it's 4 years plus 5 months.
Okay.
That's the
Yes,
difference.
then times, yeah, exactly. Then times 120, then times 10%. 79. So what's the difference here? So 720 minus 67, what do you have? That's 53,000,
You
Abi.
said one.
What do you say?
I was asking what you said. You said 120 minus 67.
120 minus 720 minus 67. So you have 654,000. Abi?
653.
653,000. And then 625 minus 79. What do you have?
625.
Minus 79.
546.
546, you said.
Yes, sir.
So we have temporary difference. How much is the temporary difference? That's 808 minus 653. What do you have?
155.
What do you have? Eh?
155. Now where is the 808?
808 minus 653. That's the tax value.
On the top. Okay.
Yeah. And then 651 minus 546. What do you have?
651 minus 546.
Yeah.
651 minus 546.
651 minus 546. Yeah.
105.
105,000, right? So the
Yes,
next,
sir.
you know, the two is called temporary difference, right? So the first, then the next thing we want to get is to get what is our net temporary difference, right? So you say our closing temporary difference is how much? Our closing temporary difference is how much? 155,000, right? And then the opening temporary difference is how much? 105,000, right? And in that case, are we together? So you
No, sir,
say
we are not. But the thing is I don't think
it's doing kai kai. It's doing kai kai. Do you understand it to this 155,000? Do you understand it to this stage?
which one.
Do you understand how I got the temporary difference?
155.
Yes, and 105. Do you understand how we got here?
I'm
Eh?
trying to. I'm just
But you were
trying
doing
to. I was the one you were calling the figures for me to type now. I didn't think the figures on my own to calculate.
So now this is it. Don't forget the journey to getting temporary difference. The journey is you are comparing the tax written down value with the carrying amount, right? So the tax down value is given 808 and 651. Then you deduct the carrying amount, right? But you don't forget for every carrying amount you are checking was there evaluation during the year. So if there was evaluation, you have to adjust the evaluation for depreciation, right? So that's why we did evaluation minus depreciation and we got the 67. So 720 minus 67 give us 653 and 625 minus 79 give us 546, right? So 808 minus 653 will give us 155 and then 651 minus 546 will give us 105. That's how we got to the temporary difference stage. Do you get it now? All right. So what's the net temporary difference now, which is going to be a deductible temporary difference? How much is that?
So what I was
155 minus 105. That should be 50,000, Abby.
50.
Is it 15?
Yes, 50.
Then you have deferred tax assets. How much is deferred tax assets? That's at 30%. Or what's the tax rate? Please, if you are given the tax rate in the exam, please use the tax rate provided. So what's the tax rate? So 30% of 50,000. What do you have?
15. 15,000.
15,000. 15,000. All right. So we then move on to check the following. Right. So now let's do the presentation for this one. Presentation in this financial statements. So what we are basically doing is to apply the format, right? So the first statement where the presentation will be done is called what? Statement of profit or loss, right? And then we have the following. So we have, are we together, please? Are we together? So we have CIT. What's the CIT amount? The CIT that we computed was how much? 174,000, Abi. Then you have TET. The TET we computed was how much? 13,000.
So this should be 30 marks question.
It's just 8 marks actually.
Is how many? 6?
8, not 6, 8.
No, I won't do it. I will go for something. 8 marks. Ah, it's too much for 8 marks.
Anyway, but it's good you know it.
Okay. It's true
Yeah.
because
So that
the process is long. So I might doing it for something, maybe more for more marks.
something, yeah,
Maybe
some
20,
yes for more marks, yeah. I
20.
agree. So we have TET at 13,000. Then the next thing we have is, do we have any under or over provision during the year? Do we have any over or under provision during the year? We do not have
No,
any in the question. We do not have any in the question, right? So the
no, sir.
next thing we then want to check is less provision for deferred tax assets. So what's the provision for deferred tax assets? 15,000. That's the amount you completed. So if we do it that way, so what do we have in total? Amount statement profit or loss. How much is that? 174 plus 13 minus 15. What do you have? Please help me.
172,000.
172,000. Then amount in the statement of financial position. So you have this. Are you with me?
Yeah.
Yes.
Yeah, so we have unpaid tax at the beginning, which is the same as the outstanding tax. Unpaid tax at the beginning. So how much is that? How much is the unpaid tax at the beginning? You have 63,000, right? Then add CIT. How much is CIT? 174,000. Then TET is how much? 13,000, right? Then the next thing you are checking is there any tax paid during the year? Was there any tax paid during the year? Was there any tax paid during the year? Please check for me.
That side of the board is not.
No, just move your screen to the left.
Okay.
So is there any tax paid during the year?
No.
We have 0. And there's no withholding tax utilized during the year. That's withholding tax credit utilized during the year. So it means the closing balance is how much? Amount in statement. Position is how much? Is how much?
We are looking everything.
Mm.
250,000.
No, there's a mistake here. Sorry. Unpaid tax at the beginning is supposed to be 78. Sorry, because that's the opening balance. I just, where we have 1 January and 31st December. It's supposed to be 78. Sorry, 78,000. Right. So there is no tax paid during the year, or we're not given. We're not given the tax paid during the year, right? But we're given
Okay.
the closing balance. Less closing balance. So how much is the closing balance? 63. Right? So the difference between that now will now be the tax paid during the year. Tax paid during the year. How much is that? How much is that? Please help me.
We are adding them.
Yeah, you are doing 78. 78 plus 174 plus
74.
13 minus 63. So you have
202.
202. That's the tax paid during the year.
The
Yeah.
the process is too long.
But it's simple. Trust me. It's straightforward. So this is pretty much it. So let's now come to what even made me solve this. The reason I went through this route is to be able to solve this past question. So let's use this to round up. This past question is this past question was when, let's check for it.
So you didn't talk about our assignment to soft farms agro ally.
Yeah, I talked about it in the beginning of the class. I said I will include that in the revision class because we still have much more to do. So I just thought of it that it's better I include it in the revision class than to just stay on that.
Okay. Then what of the mining aspect?
The mining.
Yeah.
Yeah, that's what I want to conclude now. So I'm solving question number 7. Question number 7, November 2022. Question number 7, November 2022. That's what we are doing. Question number 7, November 2022. Are you there with me?
Yes.
Question number 7, November 2022. That's what made me go through this route.
Question 7.
So please, can the volunteer read so that we can move on from there?
Question 7.
Or let's do it this way. So you are, like I said in all the classes, always read the requirement first. So determine the tax liability for the relevant years of assessment. So the name of the question is ICT REC. ICT REC, Mining Company Limited, right? So determination of tax liability for so what's the year of assessment, everybody? You know, we're given our statement to 31st December 2021. So it means the year of assessment will be 2022 years of assessment, right?
Oh.
So here we have what? Net profit. So what's the net profit? Yeah. How much is net profit?
3320.
3320. Right. Add disallowable expenses. Right. So we have turnover, rent, direct mining, salaries, then depreciation on mining plants,
No.
right? Disallowed.
No.
Depreciation on mining plants is disallowed. You know, any form of depreciation is disallowed, right? Then we have depreciation other non-current assets. Right. 7. Please, if your background is noisy, you can mute your mic. Then we have other admin and general expenses allowed except otherwise stated. Then we have loan interest allowed except otherwise stated. Then we have loss on disposal. How much is the loss on disposal? 200. Right? So we need to check the additional information. Is there any additional information of importance to us? We have the interest on loan, unrelieved loss, capital allowance, tax non-value of the asset. So we don't have any other thing here. So what's the amount here? Are we together?
Yes, sir.
So you have 25 plus 7840 plus 200. So what do you have? 10,540, Abby. Less non-taxable income. So what are the non-taxable income that we have? We have dividend received. You know, dividend received is a franked investment income, right? How much is dividend received? 3,900. Then we have interest on foreign deposits, provided it is brought through appropriate channel into Nigeria. So you call that how much? Am I alone?
No.
2750. So 2750 plus 2750 plus 39. What do you have? 6650, Abby. So you deduct that as 6650. Then we now say you have adjusted profit. How much is the adjusted profit? That's
2750.
3320 plus 10,540 minus 6650. What do you say? 34,210, Abby.
Yes.
Is that what you have? Then
32
less
minus
loss relief. How much is loss relief?
34 to 30.
So we're told that loss relief is 2,800. 2,800. So how much is 2? So what's the loss relief there? What's the amount? Please help me.
Loss relief.
I mean, deduct the loss relief from it so that we can get the value before determining the capital allowance.
3140.
31,410 less capital allowance. How much is the capital allowance? Capital allowance as agreed is 7,250. So what do we have?
7 to 15. We have 24,160.
Total profit 24
160.
160. Abi. So then we'll move on and say CIT
24.
at 30%. What do you have? Please help me.
7248.
7248. Then TET at this year of assessment now is 2.5% of accessible profit, right? Which is same as the adjusted profit. So what do you have?
2% of accessible.
2.5 based on the year of assessment.
Okay,
Always consider the year of
2.5.
assessment. You know, it's 2022.
2.5. 2.5.
So you have
Just see what
855.25, Abi?
yes, 855.25.
What's the total tax
855.
liability?
855. 25. You say the total liability.
Yeah.
7. That's the 80. 95.25.
Eh?
That is
8959.
8095.
810.
8095.25.
810.
Your answer is not correct.
8,103.25.
8,103. That's more like it. That 3 is
0.25.
plus 8 plus 5. 8103.2.
855. 810. 810.3.25.
Yeah. Good. So that's the A part of the question. The B part is to determine the deferred tax provision. So we go the same route. So determination of deferred tax provision. Abi, by now you should be used to this step. Oh,
Sir, what you just taught us now.
but this is the third time I'm repeating it.
Ah, today.
What is that? Is this mining? Is this mining?
I don't like to you. I've been sleeping, oh, but I'm this way.
I know you've been sleeping. Oh. Shiba was telling that.
It's just that table. The table did not clear to me, but I know when I get time, I'll look at it.
Don't worry, it's simple. He said, "Is this mining?" It's mining now. Abi, what does it look like?
Sir,
Oh,
we
it's too
didn't read
simple
the
to me.
question. Sir, you
We
said
read the question now.
we not read the question. Oh.
What did we solve?
We just
November
started. We
20.
started the requirement and we started solving. I don't know whether that's a very good technique to use in exam.
November
When they say
2022
five
question
But
minutes,
7.
you
honestly,
just start copying
honest,
something.
honest is a very good technique to use. Oh. I will not lie to you. In
It is
the
so.
exam, are you
No
with me?
point long
You know, I've always
story.
told you. You know, in the exam, I've always told you that read the requirement first. But most of the time, especially when it involves a lot of narration, if you get carried away with the narration, you would have even forgotten the narration by the time you are reading the requirement. So you are wasting time. So read the requirement first. Then after reading the
Start the
requirements, what say?
You start your computation.
You start your computation. So is with that computation, you know that this is what I'm looking for. So once you read the requirement, you start your computation, then you start from the beginning again and start picking up figures together. It's better that way. I will not give you, that's the format. You know, 3 hours, 15 minutes is too small for you to do the exam. It's too small, especially if you know what to do. If you don't know what to do, that's when it's going to be an issue. But if you know what to do, it's not going to be an issue. You get what I'm saying now? Like I said, it's too small if you know what to do. That's if you know what to do. You are going to find out that you will not even finish like 3 questions before you hear by my watch. This is also time you have 1 hour 30 minutes more. You're wondering what have I done? When did I even come in here? It's already 1 hour 30 minutes more. You get what I'm saying? So to save that time that you don't have, always read the requirement first and then pick what you need from the question. There's no reason why you need all these things, the introduction, the issue of competition of you don't need them. But the reason I knew I don't need them is because I read the requirement and the requirement says I should compute the tax liability, right? And I know to compute my tax liabilities, net profit, add disallowed, less non-taxable. So what I'm looking for is net profit, disallowable expenses,
So in the case
and what?
in the case where this disallowable expenses has some footnotes.
Yes, you read the footnotes. I read the footnotes.
Okay.
I read the footnote. That's when I read. You must have read when I read about interest on foreign deposits because that affected my interest. And that was when I explained that it is brought through appropriate channel. Did you doze off in the middle of the class? Because he reached to ask.
Myself, sir.
No.
It's just that I saw you speeding off, and I just said that this is a very good exam technique. Speeding like that and then saving time. Yes.
Exactly. It's just the best. Trust me. So you have the first thing we are looking for is the tax base, right? And we said in the question, if you don't have tax base, the tax incident value will be the next thing to use, right? So let's go to note 4. The tax incident value qualifying capital expenditure at the 1st December after the capital allowance was what? 35310. Is that clear?
35110.
Right. Did you see that?
Yeah. 35110.
Yeah. As usual, I'll give you assignment today. So the assignments, I have my assignment already.
We talk about these other assignments. There were some areas that we needed some kind of guide.
Yeah, talk to me now. Talk to me. I will always give you the guide I need. So what's the opening? The opening tax incident value, note 5, is how much? 42,620. Can you see that?
Note 5.
Yeah.
Yeah.
42,620. Right? Then
Yes,
less carrying amount. The way you used to say sir is always funny. But like carrying amount. So what's the carrying amount? So the carrying amount is how much? 23.
35110.
No, the carrying amount, that's the closing carrying amount now is 23,700. That's note 4. And then note 5, you have 33. Is Omeke here? No. Right?
Madam Omeke.
She's not here. Let's move on.
I'm here. Why won't I be here? I dey hear now. You only me know they call lecturer now. So why I go talk?
No,
How far I dey here?
I'm gonna call you. I'm gonna call you actually. That shows you're not here, sir. Because I was not that called you.
I'm here. I've been here since all along. I thought I heard
Okay.
your voice.
No, he called you first when you didn't respond. That's when I shouted. He called you first. It means you don't stop.
It's Note 8 now. Note 8. The company valued its mining plants during the year, and the valuation there surplus was how much? 5 million. And don't forget, anytime we have revaluation, we have to adjust the revaluation surplus. Is that clear? Right? Then you have depreciation.
So why is this one like this? This one doesn't need capital allowance.
We don't do capital allowance here. You know, we use capital allowance only for the computation.
Okay.
We've dumped the computation part. We've ended the computation part. We are now in
So
the
capital allowance.
IS 12 part. We are now in the IS 12 part. The capital allowance is only necessary for the determination of tax liability, which we've done here. Do you get? So here, what we are doing now is the deferred tax provision.
Okay.
Right. So don't worry. So how many years do we have between the time the evaluation was done, right, and the current year? How many years do we have between the time revaluation was done and the current year? How many years?
It was
2017 to 2020.
2017, December 31st.
Yeah, so we have 18, 19, 20, 21. That's 4 years for 2021 and 5 years for
No.
2022. Is that correct? So we have,
Please come again with that.
so it
Well,
was
because
revalued in 20,
I'm seeing 217.
yeah, it was revalued in 2017. So we are counting now. How many years do we have between 2017 and 2022? And 2017 and 2018 and 2017 and 2021. Do you get it now?
4 years
Okay.
and 5
4 years and 5 years. So we have 5,000, right? Times 5 times 10%. What do we have? Then we have 5,000 times 4 times 10%. So what do we have? Please help me. Please help me. Oh.
Now we should do what?
5,000 times 5 times 10%.
2,500.
You have 2,500. And the other one is 2,000, Abi.
Yes. 2,000.
So what's the difference? So here you have 2005. That's 25 minus 25, right? And there you have 3,000, right? So 23,700 minus 25. What do you have? You should have something around 21,200, Abi.
21,200. Yes.
21,200, yeah. There you have 3,900. Here you now have temporary difference. How much is temporary difference? How much is the temporary difference?
13,900.
13,900. Okay. And here, what do you have?
Temper.
That's 42,620 minus 3,900. What do you have?
42. What do you see 42?
From the extreme, the tax base 2021.
11,720.
11,720. Right. So we have the VAT tax at 30%, because that's what we asked to do. They only told us to look for the VAT tax provision here. So, and they told us for the 2 years, not the difference between the two. So how much is the VAT tax provision? So how much is the VAT tax at 30%? So 30% of 13.9. What do you have?
4,170.
4,170. And then you have 30% of 11,720.
3,516.
3,516. Right. So that's it. So with this, you've been able to answer the question. Because they only told us that they didn't tell us to do the presentation. You said the VAT tax provision for 2021 and 2022. Right. So that's it. Any question?
Please, sir, how do you arrive
Please.
at 1,720?
11,720.
Okay.
That's
The difference.
42,620 minus
Okay.
3,900. Yeah. So this is
Okay.
it now. So what you will do for me now, your assignment is you will do presentation for this one. You will do presentation for this question. You know, this question, I didn't do the presentation. So your assignment is you are going to do the presentation for this question. They didn't require you, but you are supposed to, do the presentation. That's your assignment.
For
Do
presenting what?
presentation, presenting your presentation in the statement of financial position and statement of statement of profit or loss. You've forgotten how we used to do our presentation.
But you didn't present the other one that you have done now.
I presented now. This is the presentation.
Okay, maybe that time I was sleeping.
Yeah. And this is the format. This is the format to use. Right? So your assignment now, do presentation for this question. Also, do presentation for the first question. So you have 2 assignments in total. You are doing presentation for Mr. Isiaka Jimo, and you are doing presentation for the VAT tax. I mean, for the second one, this ICT reg that we just solved. So that's your assignment. So tomorrow, what I just did now is the reporting side. So tomorrow I will deal with the double entry side, and then we'll call it a night. I mean, we'll call it a topic there. So from there, we'll then be able to move to the next topic tomorrow too. Tomorrow we should be
Let
able
us
to
see the
move to the
table,
next.
sir.
Eh?
We are not
No,
seeing
I'll
the
send
table.
this. I'm sending the solution to you this immediately. I'm sending the solution to you. Do you get it now? All right. So thank you very much for joining tonight's class. I
No problem.
appreciate you. So see you again tomorrow.
Thank you, sir.
And also, thank you for your patience over time. You see now we are no longer logging out and logging in again.